I hope everyone is settled, especially people at the back. Good day, everyone. I am Pavleen Taneja, heading Investor Relations at Jubilant Ingrevia Ltd. On behalf of our company, I warmly welcome you all to our Investor and Analyst Meet 2025. Before we begin today, I would like to brief you on the safety and security arrangements here. Please take a moment to familiarize yourselves with the venue and the nearest exits, which are located on your left and on your right. In case you have any emergency, these exits will serve you as a safe evacuation point. Additionally, we have an assembly area outside for emergencies. If you or anyone around you requires medical attention, please contact the nearest event staff and they will promptly coordinate medical assistance. Secondly, I would request you all to please keep your mobile phones on a silent mode. Moving forward, please note that today's discussion will include forward-looking statements which could be considered in relation to risk associated with our businesses. We have three main objectives for today. First, to provide you with deeper understanding of all our business units. Second, to share our vision and outlook for the next 5 years concerning the Pinnacle 345 strategy. Third, and the most importantly, to offer you the opportunity to meet and interact with our business leadership team present here. With that, I would like to introduce our management team. Today we have with us Mr. Hari S. Bhartia, Co-Chairman of our company, Mr. Deepak Jain, Chief Executive Officer and Managing Director, Mr. Varun Gupta, Chief Financial Officer, Mr. Vijay Kumar Srivastav, Head of Operations and Whole-Time Director, Mr. Arvind Chokhani, Group CFO, Jubilant Bhartia Group, Mr. Amrish Dixit, Head of Specialty Chemicals Business, and rest of the management team. The agenda for today is as follows. First, Mr. Hari S. Bhartia will provide an overview of Jubilant Bhartia Group and our company. Following that, Mr. Deepak Jain, along with the management team, will introduce the company and share our vision for Pinnacle 345. Towards the end, we have an interactive Q&A session to address your queries. To register your queries, I would request you to please scan the barcode placed on your table, and we will address maximum possible questions in the last 30 minutes. Following the Q&A session, please join us for cocktails and dinner and engaging network session. At this point, we would like to present a brief video showcasing Jubilant Bhartia Group and the company. Without further delay, I would like to invite Mr. Hari S. Bhartia to share the group and company overview. May we have you on the stage, sir?
Good evening to all of you. We really appreciate, I know all of you have many things to do and I can fully understand, but we really appreciate that you have come here this evening to spend time with us and listen to the story of Jubilant Ingrevia. I must tell you my story of my connection with this company. It was 1979. I just passed out as a chemical engineer from IIT Delhi. By the way, our CEO is also from IIT Delhi. And my brother at that time was trying to set up a new company which was known as VAM Organic at that time. He was just, I think, the business plan, that was the license Raj, and we got the approval to build the end product assumed was vinyl acetate monomer, and with all the intermediates like acetic anhydride, acetaldehyde, acetic acid, ethanol starting from molasses. So it was a unique concept in late 70s put together. Technology was brought in from different places to really create the first total bio vinyl acetate monomer. Every product, the starting raw material was molasses. It was quite unique from that point of view. Today the value of bioproducts are much more than what it used to be in the 70s. At that time, the feedstock was cheapest for us to make these products. And so when I joined, my first job was to go and buy. We have almost in Gajraula we have almost 460 acres. So my first job was to go and buy land from farmers. So I used to be sitting in Hasanpur Tehsil and negotiating with farmers to buy. So we bought 100 acres that time, then it expanded to almost 5 times. So I'm deeply attached to what Jubilant Ingrevia is today, because I've seen my own career growth and the growth of Jubilant Ingrevia. And really, this was the starting point for us to build the pharmaceutical company, which is now known as Pharmova. And even Jubilant Industries was really part of one large VAM Organic Chemicals, which became Life Sciences. And only in I think it's 2021, we decided that we will kind of break life sciences into 2 divisions, because I think the idea was to really transform what we were trying to do in the chemicals. And that's where the journey of transformation started, to really bring more focus in the group to what we are doing in the chemicals. We also changed management in terms of leadership. Deepak joined. We have new leaders like Varun. Many of our team members joined when this transformation started, to move it from chemical intermediates company into more of building a specialty portfolio. And in the specialty chemicals also, our effort is to even look at higher end products. Our products go into cosmetics, which is applied on skin for nutrition and different other applications. It goes into hair care, in personal care products. So you can imagine that for us, this is a major transformation now, focusing the company more and more towards specialty. And if you want to be a specialty company, and I believe 60% of our profits today comes from specialty portfolio, you have to be very customer centric. And I think in the last few years, that's the major change. Not to be inward looking, because if you are a intermediates company or a commodity based company, then the customer centricity is not taken that seriously. But I think in the specialty, we need to work very closely with our customers. Sometimes they come with their problems to us and we need to solve them. If you want to be a CDMO, you want to do contract development and manufacturing, then it requires strong partnership and also strong trust, because they are handing over some of their most important molecules for you to manufacture. So I must tell you, there has been a sea change in the way we partner with our chemicals, and I'm sure Deepak will share a lot in his presentation, the transformation that has happened in different parts of our specialty business. And of course, with specialty, we were always strong in some of the chemistry platforms, but I think we are adding more capacity on research. We added research in Greater Noida. We have pilot facilities plus research facilities in our manufacturing locations. And the other part was, if you look at our infrastructure, the 4 main facilities, which total amounts to almost 1,000 acres. Gajraula is 460 acres, Bharuch is 310, and a lot of them are still, that infrastructure that we have built has a lot more capacity to be added there. It has the potential to almost double if you look at the kind of infrastructure that has been built. And with that infrastructure, we have recently worked on I'm told almost 200 digital interventions. And Jubilant Ingrevia won the prestigious World Economic Forum Lighthouse Network Award, being the only chemical company globally in the 2024 cohort. This is a solid achievement. Using data and analytics for improving productivity is really outstanding. And not only our Bharuch facility, we are now working across all our facilities to improve productivity. If you are a chemical manufacturer and if you are not safety first, you are not sustainable. Outstanding job has been done by our team across all facilities. Deepak can share with you the outcome of that, but I am so pleased that our care for environment, people, and safety all across is one of the highest level that I have seen in the last many years. Sustainability remains at the core of our operations. We were ranked the top 5% of global chemical companies with EcoVadis Gold rating and among the 2 top Indian chemical companies in the ESG score. Also under the Dow Jones Sustainability Index of Corporate Sustainability Assessment of 2023, we achieved a ranking of the 93 percentile. This really requires a lot of work. And also it builds trust with our customers. They see that we are really a long-term sustainable operations. As Deepak has shared before, his Pinnacle 3-4-5 journey, which aims for 3 times revenue growth and 4 times EBITDA growth in the next 5 years. At the end, I must just tell you that personally at the board level, we are superbly excited about the transformation that is going on and some of the stories that you will hear now in the presentations later on. Thank you again for coming tonight and listening to our story, and I look forward to interacting with you later in the evening. Thank you.
Can you hear me? All right. Good afternoon, everyone. Thank you very much for coming over and welcome once again to our Investor Day. It's a privilege to have all of you in the room and share our story, not just from last 1.5 years, but also talking about what we are aspiring to do in the coming years and how step by step we are building out that story. Before I introduce the agenda, I just wanted to quickly introduce myself because I have met many of you individually and in smaller groups. So, but just very quickly in 2 lines, I joined Jubilant Ingrevia as CEO and MD about 1.5 years back. And before that, I was with Bain & Company, senior partner, leading the chemicals and industrials practice of Bain in Asia Pacific, and had the privilege of working with several of chemical companies and leaders in India and in the region, including, of course, Jubilant Ingrevia. And when I took over this role about 1.5 years back and met Mr. Bhartia first time, his first few words to me were that, Deepak, this is a true transformation, as he just explained here. And the number one thing I want you to work on is to bring customer centricity to the organization. So I'm very happy that with whatever Mr. Bhatia said and the hard work that all of us have done, we can already see moving in the right direction. We'll talk about how it is impacting our business and what we expect to get out of it in the coming years. But we have started to take the first step towards it, and I'm quite confident that in coming years you will see many more achievements and accolades coming our way on the back of all the hard work the team is doing. What we are going to do today is we'll talk about, I'll take the first 20 minutes or so to talk about the company, to talk about our Pinnacle 3-4-5 journey, what we aspire to do, but also share the progress from the last 3 or 4 quarters in which we have started to take those baby steps towards the Pinnacle 3-4-5 journey. And the outcomes of those baby steps have given us the confidence that we are taking the right journey. We, of course, have a lot more work to do in coming years, which the whole team is committed. The leadership team sitting in this room, whom you will interact with today, is fully committed behind that vision. So we'll talk about that. Some of the leaders from the leadership team will come and present the specific BU-wise plans as well as progress on 3-4-5. We'll also talk about our operations, how we are transforming them, the safety aspect, the sustainability aspect, and many more things we are doing in the company to ensure that the right enablers and foundation which is needed to deliver on this Pinnacle 3-4-5 aspirations are in place in a very foundational and robust manner. Varun will touch upon the financial plan and discipline. While a lot of focus is on putting in the right inputs and hard work into the business, of course the outcomes matter, and one of the things which is needed is to have the right financial ecosystem, the team, the tools to ensure that we measure what we are doing with the right metrics and at the right time, and take course correction as and when it is needed. So Varun will talk about all of that, and then I will round up by sharing the overall investment thesis. Before I get into the details, perhaps we'll play one more video on Jubilant Ingrevia for a couple of minutes, and then we can just dig into the details. So Gaurav, can we have the video, please? Thank you. So let's jump in. I think Mr. Bhartia already covered a little bit about the story of how Ingrevia was created in 2021. We were together with Pharmova, known as Jubilant Life Sciences until late 2020, early 2021, and that's when the split happened between Ingrevia and Pharmova. Ingrevia literally means ingredients for life. It's a combination of two words, and we are truly and fundamentally an ingredients company which supply different kind of ingredients into life sciences sectors such as pharma, agrochemicals, cosmetics, now even semiconductors and many others. And we'll talk about that more. And the fundamental objectives behind this split was, number one, to unlock shareholder value, of course, and we have seen the magic of that happening over the last 4 years when both the companies have done extremely well and have grown more value for their respective shareholders. We created the separate companies. We were very clear that Pharmova had a lot more businesses on the pharma and healthcare side, while Ingrevia was focused on chemical intermediates, which was fueling different sectors, as I said. So it was critical to bring a lot more focus, a lot more investments into those businesses, and that's exactly what has been happening over the last 4 years or so, when we invested in the business almost 2,000 crore, created new R&D centers, and hired and grown the team over the last few years. And of course, as I think most of you know, chemical sector has provided so many new opportunities, especially in the last 4 or 5 years since the macroeconomic factors turned in favor of India with China +1 and trade wars playing out. And just capitalizing on those opportunities was very critical, and hence it was required to have a very different kind of focus on those opportunities, which is what Ingrevia has been doing over the last 4 or 5 years. The whole story, I think you saw glimpses of it in the video as well, can be divided into 4 major chapters. Of course, we got created as VAM Organics in 1978, and that's when we focused on the VAM chemistry, the acetic anhydride, and the whole acetyls portfolio. In the second chapter, which played out over the next 2 decades, we added pyridine, and we are very proud of the pyridine chemistry. We are globally #1, and we'll talk about it more in our specialty portfolio, how it is helping us identify and capitalize on the new opportunities. But in the next 2 decades, we expanded our acetyls portfolio, but also added pyridine as our core chemistry. Starting 2011, we started moving forward into the pyridine value chain particularly, and added almost 3 dozen pyridine derivatives, and we are #1 in almost actually 35 of them out of the 50 odd pyridine derivatives that we do today. We also forward integrated in picoline value chain to add vitamin B3. So chapter 3 was more about forward integration both in the pyridine and picoline value chains. And what we call now, which probably in my view is the most exciting chapter of Ingrevia's history, is the transformation into the specialty leader, which is what Mr. Bhartiya alluded to in the beginning. We are doing several changes. The whole journey started after the split in 21, but in the last couple of years, we have given a new momentum and acceleration to that journey in multiple ways. Of course, we continue to focus on our core businesses of acetyl and pyridine, particularly pyridine, adding more and more products in the forward part of the value chain. We have added diketene as a new platform, and we already have almost half a dozen products in our portfolio, and we are hoping to add another half a dozen in next 12 months. We have gotten our CDMO business off the ground in last 4 years, and you will see later on in the presentation that is going to be the biggest driver of our growth and profitability in coming years. We already announced some big contracts in last 2 quarters, and there's many more such achievements and announcements to come in next few quarters. Our specialty business in the nutrition side, beyond vitamin B3, has started to pick up pace and will drive the future growth. So this is just a start of that transformation that we were talking about, and getting big and scaled in specialty, which I will talk about in the subsequent slides with the rest of our team. How we look at our business today, there are 3 parts, which is what we share with all of you every quarter. We have the specialty business, which is the biggest part of our business now, almost 42% of the portfolio. We are globally #1 in biopyridine, in beta picoline, and many other derivatives of pyridine, almost 3 dozens of them, as I said. Within specialty, we have 3 business units. We have CDMO business, we have fine chemicals, and we have pyridine and picoline. We'll talk about each one of them in far more detail, even more detail than what we have talked about in our IR presentations over the years. The second pillar of our business is the nutrition business, which is where we have vitamin B3, where we are globally #2, and we just commissioned our cosmetic grade and food grade B3 plant a couple of weeks back, and once it fills up its capacity, we are hoping we'll catch up on #1 position very soon. We are domestic leader in choline, vitamin B4, and we are expanding that portfolio and adding more specialty products to it as well. Chemical intermediates, which is our acetyl business, we have some world-leading products there. Acetic anhydride, we are world #1 or #2 in merchant market capacity, depending on which year you talk about, and we are continuously gaining share in international markets like Europe, and we have maintained our 75% plus market share in the domestic market. And likewise, in ethyl acetate, we are very scaled, one of the biggest players in ethyl acetate in the country, acetaldehyde, bioacetic acid, and many more products that we have in our acetyls portfolio. So this is how we look at our portfolio today. I think the one underlying theme which you see in our core products, whichever chemistries or products we have picked up, we have invariably made a leadership position for ourselves, and that defines our aspiration on anything new we are doing. Some of the new aspects of our business, the growth vectors we'll talk about in the next half an hour. You will see the starting aspiration, Daikinin being a prime example. Our aspiration is to become top 3, not just in India but globally, and that's what all the investments are about. All the portfolio we are developing and the products which are in R&D phase will help us get there in coming years. This is the current profile of the business. Business-wise, I already talked about specialty chemicals, almost 43%, the biggest business. Acetyl still remain big and is fundamental to our business. It's a core business. It gives us the threshold level of scale, which helps all other businesses. It also feeds into other businesses, and nutrition almost 20%. By application, fairly diversified and application, which helps us even in tough times like what we saw in last 2 years. Pharma is almost 1/3 of our business. Nutrition is catching up very fast, growing fast, almost 22%. Agro varies between 20 to 25%. Agro has not been very good market-wise over the last couple of years, so the relative share has come down to 20%, but in stable times it touches almost 25%. And then industrial and consumer. Consumer also is picking up on the back of some of the investments we are making in cosmetic-related products and hair care and some other areas where our core products as well as some of the CDMO opportunities we are getting. Geographic-wise, India is almost half our business, but what is driving our growth going forward is the international business. I'll talk about it. Our businesses in both US and Europe have grown substantially even in the last 1 year, and despite the fact that growth has been slow in the Western world. I'll show that data. But going forward, we expect exports to be almost 70% of our business in coming years. Facilities, we already talked about. You saw it in the picture, so I won't repeat, but there are 2,000 plus people who work in our organization. We are making some changes in the organization. I'll talk about the team as well. Hiring the best of the talent in areas where we need to strengthen our capability to deliver on the growth vision that we have painted, which we'll discuss in a few pages. I think R&D is one area which, in all honesty, I think historically we have underinvested. And only in the last few years, with the advent of the new R&D centers we have created, the one picture you see on the left-hand side of this page is our newly built R&D center in Greater Noida. It houses almost 1,000 engineers across our group, and almost 150 of them are dedicated to Ingrevia. Some of the cutting-edge work, especially in our fine chemicals, CDMO, and nutrition portfolio, is happening in that R&D center. We also have R&Ds in our big plants, and we are investing. Somebody was asking me outside, what is our R&D spend as a percentage of revenue? I said it's still very low. The good companies in India have caught up to almost 2.5% in chemicals R&D spend. At a company level, we are probably less than 1%, but even if I take acetyl out, which skews it, still we are on the lower side, and we aspire to at least double it up in coming years, because that is the kind of innovation which is needed to fuel our growth aspirations. This is the leadership team. As you can see with the green dots on the page, most of them are in the room today. Some of you have interacted at the booth, so please find them, interact with them. You will know what their aspirations are, and as a leadership team, one of the things you will see, almost 50% of the leaders on this page have taken up these roles in last 1.5 to 2 years. So we have gone through a real change in the organization as well, starting right from the top. On one side, we have several members in this team like Yuvraj, Anurag, Amit Saini, Sumit, and many more, who have been in the Jubilant system for several years, who understand our core capabilities, chemistries, and understand what we bring to the table, and are able to explain it to the customer, but also use it to deliver on the expectations of the customer. But at the same time, we have brought in people from outside, be it Ambrish. Now Vishal has just joined us last week for our human nutrition portfolio. Himanshu came in a couple of years back. Vijay came from outside. Varun just joined 6 months back. Birajiv joined about 4 months back. So wherever we felt that the organization needs a different way of working to deliver on the expectations of the customer, a specialty customer has a very different kind of expectations. We have tried to bridge those those gaps. We are still going through some changes in the lower layers in the organization. We have moved to a culture where we are doing a lot of changes from the perspective of what is not going to work from future growth perspective, and accordingly building in new teams, bringing in new members to bridge those gaps. Of course, the quality systems and world-class accreditations are just, I would say, table stakes. It's good to see some of the effort and work we have done over the last 1.5 years getting even externally acknowledged. I think again, Mr. Bhartia talked about it. This is one of the unique things which exists with Jubilant as a group, not just in Ingrevia. For last almost 20 years, we have been ESG focused. We started focusing on ESG in early 2000. We have been part of EcoVadis, Dow Jones, and several other ratings for almost a decade, and we have maintained our top position, top 2 or top 3 positions in those rankings for several years now. And every year, we keep looking for new initiatives which help us just move ahead in that journey. This year, you saw it on the video, we have signed contracts, 2 contracts with O2 Renewable Power, just as an example, which will take us our power composition to almost 35% renewable. And then we are not going to stop there. We'll keep looking for more areas which can help us become more and more green in coming years. So that was a quick snapshot of what we are as an Ingrevia, what changes we have made in recent past, and how we are structured. Let me also talk about Pinnacle 345. I think the video explained what I call the hardware part of it, which is the numbers, 3x growth, 4 times EBITDA in next 5 years. But I think the heart of Pinnacle 345 is what I call the compass. This is the vision we have as leadership team, as board. We aligned on it about 1.5 years back. What do we want to become? We want to be the leader provider of innovative solutions in our core chemistries. I think the key words here to focus on our innovation and core chemistries. As a company with almost 45 years of history, there's probably no chemistry which we have not worked in. So we have a lot, but we also have some of the core chemistries you would have seen on one of the booths outside, almost 12 to 15 of them, which is where we get our bulk of our business. And those chemistries and their potential is tremendous. We have not tapped it fully. So the idea is to continue to focus on those chemistries and obviously come up with more and more innovative solutions on the back of it. The second thing on this is the middle part, which we call the core pillars. I think again Mr. Bhartia covered many of them in his opening remarks. Customer centricity being the very first one. The world-class operations, you should visit the booth. Vijay can explain you the kind of initiatives we are taking there, including the completely revamped safety program that we launched 1 year back, and it is already showing a very good progress. Innovation and technology, I talked about R&D. ESG, again, I talked about, and people focus. We are going through transformation culturally also in the organization, and that starts from the way each one of us from the leadership team, how we engage with our team, how quickly we respond to our customers, how quickly we respond to our internal requirements, and what message we send down the organization. So almost every aspect we are working on, and the hardware part I already talked about. And what it means in terms of numbers is, if you take 2024, the trailing 12 months, we are about 4,200 crore in top line. We hope to get to 12,000 crore. In all honesty, we have a bottom-up plan which takes us to about 10,000 crore. We have a gap of 2,000 crore versus that vision. We feel we will be able to figure out how to bridge that gap through inorganic opportunities or by finding new platforms along the way. But based on the current products, platforms, as well as visibility we have, we feel that we are confident of delivering organically at least 10,000 crore through that bottom-up plan. The bulk of the growth, and I will show it on the next page, will come from specialty and nutrition part of the portfolio, which essentially means our margin profile will improve significantly. You have already seen it in the last 4 or 5 quarters. It has moved by almost 1 percentage point every quarter, from 9.5% to 14% in the last quarter. And a lot of it has come from new high margin growth areas, but a lot of it has also come from some of the lean and cost initiatives we have taken, which again we will explain down the line. But on the back of all these efforts, the portfolio shift towards high margin segments and the cost improvement efforts, we have a path to get to 2,000 crore of EBITDA. And ROCE, again, it has improved in the last 4 quarters from 9-10% to almost 12%. We have a path to take it to 17 to 20%. Obviously, we'll keep investing in the business. So sometimes the ROCE number gets skewed by what we call the VIP capex. But adjusted for that, every investment we are taking in the company has a business case which is banking on a 20% plus ROCE. And hence, majority of the future portfolio, or most of it, in fact, all of it, will be 20% plus ROCE. This will require some fundamental shifts. Again, a lot has already been talked about it, so I won't belabor the points on this page. But this is a true transformation in making, and we have taken the first few steps. As I said in the beginning, has given us the confidence that we are on the right track. We are on the right journey. But the specialty will increase, the customer centricity, of course. I think some of you speak to our customers also, and it's very heartening when we hear the feedback from the customers through some of you. Whenever I meet any of you, I think some of you know, my first question is, what are you hearing about us? Please tell me, right, or transparently. So that's always a very good filter to relook at or look back and look into the mirror and see whether we are doing the right things with our customers and external stakeholders or not. Innovation, technology, ESG, world-class operations, digital, and of course the org systems and culture are all changing significantly. And I won't, somebody asked me outside, are you done with all the changes? I said, I won't be done till the time I'm running this company, because change is the only constant, and the world is moving very fast. We need that change, and we'll keep making those changes. And wherever we hit the wall, we'll of course bring something new to debottleneck that problem. I think this is Pinnacle 3, 4, 5 summarized in one page. And apologies for the small font. I will just touch upon some of the key points. But my team members will dig deeper into some of them one by one, vertical by vertical. If I have to just highlight a few areas which you will, and hopefully some of it you have started to notice in our quarterly results. If I start with specialty, I think pyridine and picoline, we are number one. We are, and we are very proud of that. We have almost 25% plus share globally. We are the only scaled non-Chinese player left in the world in pyridine chemistry, and it's still a big and growing chemistry. There are many more new products coming up in our own portfolio, but also we supply the building blocks to many of our customers, and we will maintain our leadership position, be it the scale, but also cost. And we have a cost leadership here, despite the fact that the Chinese competitors have been very competitive. But one metric which I often quote is the world has excess capacity with only 50% capacity utilized today in pyridine. We run our plants at 80%. We are debottlenecking the plant this year to increase the capacity of pyridine because we are running our plants at 80%. And that just shows that despite all the competition, price drop from the Chinese competitor, we are still competitive versus them, and to an extent that they run their plants at 30-40% utilization, and we are running at almost 70-80% consistently. So that will remain focus. We have to protect our leadership position, and we will protect our leadership position in pyridine. The new opportunity coming in pyridine portfolio is oil field chemicals. This is a segment which started to grow. It's a byproduct of pyridine value chain. We have built a reasonably scaled business over the last couple of years in oil field chemicals, and will continue to push there, and it will scale up significantly. In fine chemicals, there are 3 parts to our fine chemical business. We have the pyridine derivatives. These are all downstream derivatives of pyridine. As I said, we do almost 50 of them, and almost 3 dozens of them. We are globally number one, and we will maintain that position. We are pushing hard. We are growing them. That portfolio, as Amrish will show in a few minutes, is still growing at 15% plus every year. Diketene derivatives, this is a platform we created 2 years back. It's not a new chemistry for us, by the way. It comes from ketene chemistry, which is linking back to our acetic acid and acetic anhydride roots. So we are very familiar with this chemistry. We have created the portfolio on this chemistry organically over the last few years. The traction we have gotten in the first 2 years is just amazing. We have created a reasonably scaled business within last 2 years, which is growing at almost 50% every year, and again, Amrish will show some of that data. And the third part, which again Mr. Bhartia alluded to, the cosmetics part. We have almost half a dozen products in our portfolio which go into skincare and hair care industry. We have very strong relationships with some of the leading and marquee names or customers in the cosmetics space. We feel it's the right time for us to leverage all those strengths, be it on the product side or customer side or chemistry side, to scale up this portfolio. And this is something which we have recently only decided, and obviously we have a set of products which have been existing for several years, but we are going to capitalize on them and grow that portfolio. The third part is the CDMO business, which I know a lot of you are very excited about, and it is the most exciting part of the portfolio for us also because of the growth we expect to get in it. Again, this has three parts. The agro part of it, we have been providing several chemical intermediates to agrochemical innovators for now almost 3 decades. Now it's time to capitalize on those strengths and convert many of those relationships into CDMO-oriented relationship. In fact, we announced 2 orders 2 quarters back, one of which runs into hundreds of millions of dollars. I think you have the details of some of them. That contract we signed in October and announced to all of you. The construction is in full swing and will be ready hopefully by October, November this year, so that we can start getting benefit of revenues coming from that project starting Q4 of FY26. The second one also, we have to modify one of our multi-purpose plants, so that is also ongoing, and that will start kicking in and giving revenues as I announced I think couple of quarters back in the investor call by middle of this calendar year. So both of those are on track, and there are many more which again Amrish will explain how we are speaking to our customers. So on agro there are more discussions we are doing with the innovators, and hopefully in coming quarters we'll be having more good news to share with all of you. On the pharma side, we have been doing pharma CDMO for almost 5-6 years. We have a handful of customers and reasonably scaled business there. Recently, last 6 months or so, we accelerated and doubled down on that pipeline. I think I had mentioned that on the investor call again. Within last 6-9 months, we have doubled our funnel size, and there are almost 12 molecules which are confirmed by the customers. Of course, pharma pipeline moves at a relatively slow pace, so we have to be patient and let that funnel grow up naturally as our customers' volumes grow up. Semiconductor is again, we announced about a year back, we started focusing on it, and within a year, we have been able to build a pipeline of almost 8 to 10 molecules where customers have already confirmed at least kg volumes, and we have already started supplying samples to almost 3-4 of them. So we are quite is a bad word, reasonably happy with the progress we have made in the first year of semiconductor. We can do a lot more, and the traction we are getting from our customers will help us hopefully open up that funnel. As I mentioned in one of the investor calls, semiconductor for us is going to be a multi-year journey because the customers are still just gradually opening up to outsourcing idea, unlike what has happened in pharma or agro over the last 1 decade. Semiconductor chemicals customers will take few more years before they can start outsourcing in a big way, but we feel we are one of the early movers here, and on the back of all the traction partnership we are getting with our customers, we feel that portfolio will continue to grow in the coming, let's say, 3, 5, 7 years. So that's on specialty. On the nutrition, similarly, we have 2 parts. Animal nutrition, vitamin B3 is our core product. We will consolidate our leadership position there with the new plant. The new plant will be focusing more on human nutrition, but even in the animal nutrition side, we'll continue to consolidate and gain share. Some of the markets are still lesser penetrated for us, like US. We are doubling down on them. B4 choline chloride, that's a core product for us, and also a rider product for some of the specialty portfolio we have created for Indian markets and the neighboring markets in Southeast Asia. So we are doubling down on them, and we see huge growth potential in those businesses. On the human nutrition side, we are relatively small today, but we are now putting a lot of thrust. We recently hired Vishal who is here in this room, and you should meet him at the booth outside. He comes with a very rich experience of developing human nutrition products. So we will be doubling down on it on the back of two products which we already have in our portfolio, which is vitamin B3 food grade, for which we just commissioned new plant, and choline chloride, which we announced to the markets and getting good traction. So these will be the rider products for human nutrition portfolio, but on the back of it, we have plans to get into the premixes and some of the formulations, which we are just starting the journey on, and that will hopefully grow in coming years. Chemical intermediates, if I have to summarize the strategy, it's about sweating the assets with a lean cost structure. So we have huge capacity. We are running most of that capacity at 70% utilization, even in tough times like this. We believe that with the leadership position and the cost structures we have and the global presence we have in these products, we should be able to push more volumes in the coming years and take those utilization levels up to at least 85–90% in coming years. So most of the incremental growth in this portfolio will come on the back of existing capacities. We don't have any plans to invest more to create new capacity in the chemical intermediates portfolio. We'll just sweat our assets, and obviously we are working continuously on the cost structure, and we have already done at least 10 different initiatives to optimize the cost structure of our acetic anhydride, ethyl acetate, acetaldehyde, and other products portfolio, and we'll continue to work on that. So that's hopefully gives a bird's eye view. We'll talk about some of the details in subsequent pages. Obviously, there are a bunch of enablers at the bottom, which I already discussed, so I will not repeat what I said on them. How it will look in terms of the portfolio shifts is summarized on this page. If I talk in terms of the business units, today, as I said, specialty is almost 40%, nutrition is almost 15–18%. These two businesses will become almost 75–80% of our portfolio in the next 4 or 5 years, with specialty taking almost 60% share and largely growing on the back of all the investments we are making in CDMO and fine chemicals portfolio. Like I said, exports will become almost 60%, 65% of our portfolio, and you can see how fast America is already growing. We expect America to become almost 20–25% of our portfolio in coming years. In terms of end application mix, the mix is not going to change significantly because these are core sectors, particularly pharma, agro, nutrition have been our top 3 sectors for a while. The agro share is increasing on the back of some of the big contracts we are signing in agro. And as I said in the beginning, it's anyway in even stable times almost 25% of our portfolio, so it will remain 25–30%. So pharma, agro and nutrition will drive, and consumer will become relatively bigger on the back of what I said on the cosmetics and then hair care space. So that's we are doubling down on. We believe we will be able to deliver. We will deliver on this strategy because of a few reasons. Number one, if you look at the markets we are in, the end application, and this is just market data for global markets growth from some of our core segments. Irrespective of short-term challenges, all those markets are growing quite well. In the global context, those of you who follow the global chemical industries, a 5–6% growth is a very healthy growth. And all these segments are high growth segments. Of course, there are some short-term volatilities, but take that out. The secular growth in all these sectors is very robust and strong. And when you translate it into what gets outsourced to a country like India, the growth becomes almost 3 to 4x. So while these sectors will grow at, let's say, 5% on an average over the next 5, 10, 15 years, when it gets translated to what comes to India for manufacturing, will be at least 15%, if not more. So that is our addressable market. The TAM or SAM, serviceable market for us, will be growing at least 15% in any of the domains or all the domains where we are present. So that was reason number one for our confidence or belief in this Pinnacle 3-4-5 strategy. The reason number two is, if you take the last 1 year and with all the changes we have made, the baby steps that I explained in the beginning we have taken, that has led to some meaningful outcomes for all of us, which actually has been on one side heartening and second time morale booster for all of us as the leadership team, that what we are doing is right and hopefully will help us build out the kind of portfolio we want to build over the next 5 years. So I will not again talk everything out of this page. You have seen it in our quarterly presentations. But be it our US FDA, that was our first US FDA. For a chemical company to go through US FDA process is a, if you have not done it, the simplest word will be nightmare. The kind of preparation and changes you have to do, and I know Vijay, myself, and many other members of the team spent several sleepless nights to just ensure that we deliver on the expectations. It was for a food grade product, it was not pharma in all honesty, but still it was a big test for us, and we were very happy when we cleared it with 0483 observations in the month of April, and it gave a different kind of confidence to our teams that yes, we are ready for some of the challenges which are coming ahead in this journey. WEF Lighthouse has been talked about multiple times, so I will not repeat. I think this is a constant endeavor from all of us to bring digital and new interventions. Vijay will talk about it. Almost 200 plus interventions we have made across our plants, supply chain, even front end, and has started to yield results. The big CDMO contracts, it took a lot of hard work, almost 1.5 years of continuous hard work with several of us just doing calls and meetings with the customers almost on a weekly basis, and giving them the comfort that of course we have the capabilities and chemistry strengths which they are looking for, but we will be responsive and we will deliver on what they expect us to deliver. So like that, there are several other achievements from the past 1 year which has given us the confidence, and that has overall improved the quality of our portfolio in several ways. Now again, I will not, some of these points we have already talked about, but you look at whichever way, whether the business mix today, the percentage share of profits coming from specialty and nutrition, you look at the customer mix, you look at how fast our CDMO and some of the new businesses are growing, you look at the composition of the leadership team, you look at the product mix, the kind of incremental growth. One thing I did not mention is in pyridine, when one of our international competitor closed down in the US, within 6 months we grabbed 70% of their volumes. So that's the speed at which we had to move to capture that market, because otherwise Chinese would have taken it from us. Amrish and Amit, I know they spoke to all the customers, we mapped out the customers, we reached out to each of the customers, and Amrish will again share the stories, but almost 70% of those volumes we captured within 6 to probably 9 months, and we have those customers now, hopefully for future as well. So likewise, there are several such examples which gives us the confidence that the overall mix, overall quality of the portfolio is moving in the right direction, along the lines of what we envisage it to be in a few years as part of Pinnacle 3-4-5 journey. And obviously financial results are just one outcome. The last 4 quarters have again given us the confidence that we are on the right track. Obviously it has taken a lot of hard work in terms of both growth, particularly volumes growth. Of course, some of the volume growth got wiped off because of price decline in the market, but that is something which we can't control. But at least if I look at our growth journey over the last 4 years, we have seen volume growth. Profitability has improved, as I said in the beginning, based on 2 key drivers, or driven by 2 main drivers. Number one is the portfolio shift we are doing, and second is the cost imperatives, which has helped us take out almost 100 crore plus from our cost structure. This data again we have shared in the quarterly presentation. The specialty portfolio has grown at 20% in the first 9 months. The profitability has improved significantly. Nutrition similarly has grown almost at 8%. Part of it got eaten up because of price. In terms of volume, we have grown probably 15%. EBITDA, of course, has improved. The one area where markets are still troubling us, and we are not out of the woods completely, is the acetyl business. That business, particularly our anhydride business, is driven by what happens in paracetamol and acephate, which is a agrochemical, big agrochemical molecule. Both these markets have gone through tough times in the last, I would say, 6 or 8 quarters, to an extent that volumes of most of our customers are either not running their plants, or even if they are running them at 40 to 50% utilization only. From the analysis we have done, where we've mapped out the inventory in the system for each of our customers, and based on the discussions with the customer, we feel things have bottomed out, the destocking is done there, and hopefully in next couple of quarters, the volumes will start to come back there as well. And gradually with a couple of more quarters, we'll start to see a price movement upwards as well. So we are hopeful that chemical intermediates will start to come back, but that's a relatively commodity product and we'll have to live with those commodity cycles. But we are well prepared by focusing on cost and by pushing on some of the products where we still see room to gain market share, which Himanshu will explain in a few minutes. So all of that has helped us in just again ensuring the overall quality of the portfolio moves in the right direction. As I said in the beginning, US and Europe have grown very significantly for us. Just to give you a sense, US used to be 5%, 4 to 5% of our portfolio. Today, its last quarter results almost 9%, and we are on track to hopefully by FY27 itself, it should become 15% plus, and obviously in the next 5 years, we want to make it 20-25%. Europe also grew almost by 30% in the first 9 months of this year, and we are hoping with the confidence that the European and American customers have shown us, will continue to grow this. And the only other point I would say on this slide is Japan is a market where we are investing now. We have hired somebody recently, and Japanese customers take time, but when they open up in a big way. So we have just started our journey in Japan in last few months. I have personally traveled there. We are traveling, senior members are traveling almost every 3 months. So we are hoping if not in a few quarters, definitely in a couple of years, from rest of the world, we'll be able to carve out Japan separately with all the push and hard work we are doing in that market to open it up. So that was, I think at an overall level, what Pinnacle 345 is and what the journey has been in the last couple of quarters since we defined and announced the Pinnacle journey. Let me now invite a few of my leadership team members one by one to talk about some of the details. I think the key points I have already covered, but it will be good for you to hear from them also directly. So let me start by inviting Amrish. Amrish will introduce himself. He joined us a couple of years back, brings very rich experience in CDMO and specialty chemicals, and will take us through the specialty chemicals presentation.
Thank you, everyone. Thank you, Deepak. It is my privilege to be here, and let me introduce myself. I'm Amrish Dixit. I'm heading the specialty chemical business as a president of specialty chemical. Around 24 years of experience, out of that, almost 18 years with specialty chemical, 3 years in API sales earlier. Out of 18 years, 2 years with Jubilant now. I've taken this role in May 23, and then 10 years with SRF in the specialty chemical business. 6 years I was running a small company called Poshak in Phosgene specialty chemical. So pleasure to be here, and really thank you, Deepak, for introducing a lot of stuff about our company, our businesses. I will try to give you some more glimpse how we have been operating, what we have been doing, and what are future plans. And here we operate 3 businesses in specialty chemical business, starting with Pyridine Picoline, which we started way back in 1991. We have been one of the largest players globally for last couple of years. This marketplace has been invaded by Chinese. Despite of that invasion, we have been firm, and today we are the largest producer of this material in the world. Followed by, we have Fine Chemical, where it is primarily started as a downstream for Pyridine and Picoline, where we forward integrated, started supplying, and this story is also linked with our growth in the pharma market, where early 2003, demand started coming up from the pharma, especially on the API side, for Pyridine derivative, and then we further diversified. Here, we have more than 50 products. Out of that, 36 products, we are globally number 1. There are a couple of products, which are coming from China. There are a couple of products which are, smallly manufactured by few very small companies within India. So we have very global position on these products. Then Deepak has talked about, we have also identified, opportunity in diketene. We entered a couple of years back. We have aspiration to become top 3 in the globe. We are not looking to dominate only in India. What we are looking for to dominate the world. And based on today's relationship, the kind of connects we are making, we are pretty confident that we would be able to achieve, one of the top 3 positions within the globe in very near future, not too far. Coming to another piece, CDMO, which, is one of our growth driver. Here, we have been talking about agro, pharma, semicon, and I would be sharing some more details. So all put together, 50% is coming from domestic, 53% from exports, 470 plus customers, 50 plus product line. All put together, we are selling to agro, pharma, industrial, paint, we are selling to consumer, etc. So how this journey has been, especially for the last 2 years, as Deepak has shared. So our revenue has grown from 1600 CR. If you see last trailing 12 months, we are 1800 CR plus. Our margins have improved. Despite of headwinds in the market, the Chinese onslaught, and there's nothing hidden. You all guys are very well aware that it has become difficult to survive in difficult market, but still we have been able to improve our margins to 20% level. And then the plan is to take this business to around 6,000 CR with a bit of 25%. And then, here the FC and CDMO business would be a key driver to take it to next level. And obviously, our protein will remain as a supplying to the market as well as a captive this thing. Another good stuff that CDMO business is a capital incentive business, You have to invest some large amount to take this business to next level. Here, I'm very, management is very supportive. We have very clear capex plan, and we believe with those kind of opportunity what we have, we should be able to achieve those numbers what we are committing. Another area, which we have identified is semiconductors and, cosmetics, which we have started working last 1.5 years only. We believe these are the new growth area which can put us in a different map. But obviously our, primary driver would be coming from the pharma and agro for next 3-4 years. Then we are also looking for inorganic growth opportunity, which fits into chemistry capability, help us to offer more ancillary, reaction capability within the area we are operating in. Typically, we have been operating 4 to 5 steps of, chemistry. So can we go 10 steps? For that, you don't require one chemistry, you require a couple of other chemistries to add it. So we have 35 chemistries platform as on date. We do bromination, we do, chlorides, we do handle esters, etc., etc. But then we are looking to add further chemistry so that we can make a very robust offering to our customer. We are not looking to sell products now. But we are looking to sell more and more services, which can help us to grow with our customers. So with this, I will talk about the pyridine and picoline, which is our legacy business. If you see, we have been able to grow our volumes by 150%. We have been able to grow our beta picoline other than, our captive as a 10%. So this is all merchant sales, where we have more than 25% market share. We have, Vertilas, which was a US company, got closed around 22, end of 22, 23. And then we have been able to capitalize all those accounts. So rather than Chinese getting entry with the margins, we have been able to sell, we have been able to capture 75% of those accounts, which has also helped us to, sell more volumes in markets. I think, Deepak talked about oil field. So we also sell certain pyridine derivatives in oil field. And we believe that, the kind of relationship we have with large players across the globe, US, Middle East, etc., we would be able to further diversify and launch new products in days to come. So for our PNP business, those relationships will become a backbone to launch new products. So we believe, OFC would be another area where we would be focusing in this, near future. And then obviously, Vijay will talk about, we have a lot of cost initiative and 80% plus capacity utilization, which will ensure that we remain one of the best players in the market. And last but not least, PNP will continue to have very high captive, demand from our niacinamide business, from FC and from CDMO, which will allow us to optimize our margins. Coming to fine chemical, fine chemical is again, I can say there are 2 parts which are running this business. One is PNP derivative, which is again the forward integration. Here, we have 36 plus product where we are the number one in the globe. We have typically from 50% plus to 75% market share, on average 55%. We have five new products we ramp up in last 1 year. We are also further exploring. We are talking to innovators, or any new molecule which is in pipeline will definitely come to us because of our unique position of being non-skilled China, the only non-Chinese player who can play really large. Then we have diketene, which we have launched a couple of years back. Now here, we had initial teething issues. We have been scaling up. We have 6 products, 4 we are launching in next 1 year. We have actually, our existing plants are 70% plus utilized. We have launched 2 more plants within last 1 year. We are scaling up further. We are also planning to have one more multi-purpose for various products for diketene. So diketene as a chemistry, we have been doing acetic anhydride, which is primary ketene, and diketene has been a natural extension. So based on these skills, we believe where, acetic anhydride, we have been handling ketene chemistry for last, since 1980, for 40 years plus, diketene for few years, but we can play this game really for a very long time. And we are pretty confident that we would be able to grow our FC business by 2 times in next 4 to 5 years. Again, for this, fine chemical, there's an attractive market. We have existing product, we have relationship in place, and we have chemistries, differentiation in terms of the capability, in terms of, various other chemistries which are required to sell this product. And that is the reason we have this belief that we would be able to achieve these targets with dedicated teams, Anurag or Yuvraj or Amit, who have been running this business. They have been with us for last more than 10 years plus. They are, know this chemistry. The team which are handling the protein and all these derivatives are there for a number of years. So with this belief, we should be able to grow our FC business by 2 times, at least 2 times. Now coming to the CDMO, which is a very buzzword. Everybody talk about CDMO. Everybody talk about, whether CDMO is good or catalog products are good or mix of both. Both of them is good. So if you see all big players in Indian market, very few are pure CDMO player, Majority of them are having their own products where they have global positions. And then there are certain products who are offering those services as an extension of those capabilities. So I think Jubilant is very unique in that sense, where we have global positions, and along with the CDMO services, we can create ourselves as a global leader in those kind of products. CDMO is, again, we have further bifurcated in 3 parts. One is agro. We have been on that space for long, but more selling our own product. Second is pharma. And third is semicon, which we just initiated 1 year back. I think CDMO agro, Deepak has already talked about. We announced a $300 million plus contract a couple of months back. We have another contract running with another innovator. So out of top 10, 7 are our big customers. We have those relationships. We have been able to create a pipeline. We have accelerated our relationship in last couple of months. We had multiple road shows. We have multiple visits to the customer. In fact, I have traveled along with my team at least thrice to US, many more times to Europe, China, Japan. We have hired somebody in Japan. We have a China office. We are hiring and moving some of our internal talent to Europe for further accelerating the touch base with the customer. US, we have an office. We are further expanding those offices with certain great talent. So we are increasing our touch base with the customer on the CDMO as well as on the fine chemical side, which we believe will help us to increase this pipeline. And then, Vijay will talk about, we have also improved our execution. So in terms of the capexes, which used to take 20 to 24 months, we are now targeting, let's say, 12 months or 14 months all put together. Coming to the pharma side, pharma has been a backbone for Jubilant for a very long time. Here, we have, I already shared, we have accelerated our efforts to hire more resources. We have 9 molecules under development. We are already working with certain innovators for some good long time. We believe the kind of relationship, the kind of trust which will help us to grow further. We have some more discussion happening. So all put together, pharma and agro, we have a strong belief the kind of relationship they will definitely help us to multiply our business in days to come. Semicon is an area, everybody is talking about semiconductor. One is the Indian supply chain, which will take some time to evolve. So what we have done, we have gone to the US, we have gone to Japan, Taiwan, to understand, what exactly the synthetic chemistry has been, asked for. And here we have been further able to identify certain molecules which are under discussion. We believe, we thought we'll have revenues coming in little early, but definitely there are own challenges in terms of chemistry abilities or, purification, etc. But we believe we should be able to have some good revenues very soon, starting from next year onwards. Then, as pyridine and choline, we have been selling for a number of years. And there is also application in semiconductor, electronic side, where we are also, just working out and in process of launching this molecule, where it should be reasonable volume coming in. And then this require capex. So, this require specific pilot plant, specific labs, which we are also working on, and I'm sure Deepak would be sharing those news in terms of when we are going to get it approved. So with all this, what we are looking for, and good part for our CDMO business, we are looking at least 5x growth in next 2 years. And I'm very pleased to share that we have already clarity for more than 70% of POs in hand. So technically 3.5x anyway it will happen. And then we are talking about taking it by another 2x. So all put together financial 30, it would be something like 7x plus growth happening, almost 10x what we are looking aggressively. So we believe with multi-year contract happening with the agro innovators, which is not only for existing molecules, we are also getting into new molecules. One of the molecule what we did is getting launched commercially, and we believe it would be one of the blockbusters within the world. So we'll also grow with the innovator, as it grows. We are further increasing our efforts to take it to next level. The kind of molecules which we are getting will help us further increasing these numbers. So on the CDMO side, we are pretty confident. The kind of infrastructure we are putting in, the kind of capex we are putting in, the kind of, the relationship we have or we are increasing will ensure that, these kind of growth coming in. So with this, I will take a pause. Really appreciate your time to hear me out. And then I would like to invite my colleague Ashish to talk more about nutrition. Thank you very much.
Thank you, Ambrish. So I am Ashish Sinha. I head the Animal Nutrition and Health Solutions business. I have been with Jubilant for past 6 years. And before that, I was with Reckitt Benckiser, GSK Consumer, Novartis Consumer, ITC, and Diageo. Before I take you through the Nutrition and Health Solutions growth plan, I will request each of you that there is a QR code kept on your table. So you can scan the QR code and share the questions if you have any to us. So in Nutrition and Health Solutions business, so we have a very strong presence in animal as well as human nutrition. We have a very robust portfolio spanning across human and animal nutrition. So in animal nutrition, we are globally number 2 in niacinamide, which is vitamin B3, and we are domestic leaders in choline chloride, which is vitamin B4. Apart from this, we also have more than 18 branded formulations. So these formulations go into feed additives. So like poultry feed, pet food, dairy feed, aqua feed, swine feed, it goes into that. It basically enhances the performance of the animal by increasing the nutritive value of the feed. So this is the product which we have in animal nutrition. While in human nutrition, we have choline salts, which is like vitamin B4 in the form of choline chloride and choline bitartrate, which goes in pharma as well as nutritional products. We also have niacinamide, which for food application as well as cosmetic application, which goes for human application. This apart, we are planning to foray in premixes, which goes into nutraceuticals and nutritional powders, And apart from that, we are also planning to identify some more straight nutrition ingredients to get into that. So in terms of geographical revenue, so we have around 74% of our revenue coming from export markets and balance coming from the domestic market. So our customer base is very robust. So we have very good association with around 400 plus customers globally who have been associated with us for long time. And in terms of split between animal and human nutrition, so 69% of our business comes from animal nutrition and balance comes from human nutrition. In terms of the pinnacle vision for the business, nutrition and health solution business, so our vision is to triple the revenue by FY30 and almost double the bottom line. So from current 12% EBITDA margin, we want to take it to 18 to 20%. And how we will do this? The growth drivers, if you see on the right-hand side of the slide. So the first is niacinamide cosmetic grades. So we have already commenced the production from the newly commenced plant for niacinamide cosmetic grade. That we will double down and ramp up the volume for niacinamide cosmetic grade and food grade from there. Then we are doubling down on human nutrition. So on human nutrition, we are focusing on premixes. We have already launched choline chloride and choline bitartrate, which goes into infant nutrition and pharmaceuticals. We are ramping up those volumes. We are also planning to go ahead with the capex. We are working on that for greenfield GMP plant for choline chloride and choline bitartrate. And the third one is specialty formulations. Now, specialty formulations, this goes into animal feed. These are like vitamin mineral premixes, emulsifiers, herbal formulations, which goes into feed. This has more higher margin and more stickiness with the customer, and which is getting good traction in India as well as the neighboring markets. So we will double down on this also. While doing this, so there will be fundamental shift in the entire portfolio which we have currently. So currently, if you see, 33% of our revenue in nutrition and health solutions segment comes from your food, cosmetics, and specialty premixes. This year, this will increase to 36% with the increased focus on the specialty formulations and the food products which we have in our portfolio. By FY30, we will take it to 67%. Now, as I have said, how this will go? This will grow with increased focus on doubling down and focusing more on human nutrition premixes. We have also deployed a dedicated team for leveraging the full potential of human nutrition, as Deepak has said. So Vishal has joined us, and he is leading the human nutrition efforts for us. Then we are pushing on CCCBT, which is the choline chloride, choline bitartrate, vitamin B4, and as I've said, we are planning to take a capex for that, for greenfield GMP manufacturing facility for that. Then niacinamide plant, which has already commissioned for food grade and cosmetics. We are ramping up the volume for that, and very soon we will take up the leaderboard #1 position in niacinamide globally. And we are adding more premixes in the feed additive segments. So that's the whole chart, how we want to achieve this aspirational growth numbers as well as the higher bottom line. So with that, I'll call my colleague Himanshu, who heads the chemical intermediates business, to take you through the chemical intermediates plan.
Hello, hi. My name is Himanshu. I take care of the chemical intermediate business division here in Jubilant Ingrevia. Super excited to be in front of all you guys and happy to take you through the acetyl or the chemical intermediate business. Yeah. So you might have already heard from Mr. Bhartiya, from Deepak, chemical intermediate being the building block not only for the Ingrevia, but from the where our name comes, chemical for lives or ingredient of life. Truly this encompasses the true meaning of that with the variety of application what we have, Our chemical intermediate division touches all throughout the applications, which are present, and it gives us that relationship which all of us talked about, in terms of customer base, huge customer base, in terms of application, most variety. You could see that pharma, agro, nutrition, consumer, industrial, everywhere this product goes. So what does it create? It creates a customer base. It creates a relationship. It creates a strength, which sometimes can be used also to open the doors for the other products. So we are there to serve those segments. How we are split in terms of our business, we are almost 70-30, 70% domestic business and around 30% export business, primarily led by Europe. And you could see that in this bulk business, we have really pushed our capabilities, and we are among the top 2 players in acetic anhydride globally. And in this market, on this scenario, considering the global player around, this is a significant achievement in terms of how we have placed and proved ourselves in the market over the years. Ethyl acetate, we still remain a very significant player in the market, and some of you, or one of you did call me out outside that where we are on this product. Sir, we are still there, and we are a significant player in this market, and will continue to be a significant player in this business. We have other products where we continue to run that, be it acetaldehyde, be it bioacetic acid, be it formaldehyde, be it propanic anhydride. So we are all there in this business. How we have shaped up and how we are going to play a role going forward in our Pinnacle 3-4-5 strategy. So what we are looking, or what we are proposing as such, is we are looking at least 1.5 times increase in the top line. Currently we are somewhere around 1700 crores of the top line with around 8% of EBITDA. So what we are looking at by FY30, we should be at least 2,500 crore for chemical intermediate division with 10 to 12% EBITDA, which is a normal standard EBITDA percentage in our kind of a business. And how we are going to achieve that? That's a critical question. The critical role here is that we will maintain our market share and we will grow our market share. We will maintain our market share in a market like India. We will grow our market share where we have already a decent position like Europe. And we will also enter into new markets where we have either not really touch-based or not been focused in the past. So where Southeast Asia being a market, US being a market, Turkey being a market for that matter, in all those areas. How we are going to do that is not only by efforts in the market, but also improving our cost positions. So I'm sure Vijay will take you all through what initiatives we are taking, but then, it's a very significant progress we have done in terms of the initiatives which we have launched, how to make our business more sustainable by looking at our cost structures and how and where we can improve those processes. And of course, we expect, as we move along, the margins will improve and we could again see that 10 to 12% EBITDA levels. Acetic anhydride, many of you also talked about acetic anhydride because this being within our product portfolio, one of the major component. Yeah, it has challenges. Yes, there has been challenges specifically in India in terms of the demand projections. Certain specific applications in India have seen the challenges and the demand overall has gone down. But I can assure you that we have not only maintained our market share, we have increased our market share even in this depressed market. So we are at around 74% market share in India, despite all the challenges. And we are also looking at Europe market where, Europe you have already seen because of the Ukraine war, it has been a challenging environment overall, but there also we are able to maintain our market share. In fact, we have also grown our market share. If I leave India and Europe outside, we have significantly grown our market share in ROW market. And that's the mandate what we have. We have to focus on these markets, grow our footprint, and probably, as we move along, knock the door of the customers, gain those entries and again be back as a number one producer of acetic anhydride globally. Other key products, what we have, in this time, apart from focusing on acetic anhydride, we have almost grown by 30% our ethyl acetate business. Like I said, somebody was asking me outside that why we are vacating this space. No, sir, we are not. We are coming more stronger in this. Propanic anhydride, we have increased our business. Acetaldehyde, in almost 180% we have increased. In this product, we have not only increased in India, we have also started exporting this product. So we are also focusing on all other areas in this product portfolio where we have space to, grow ourselves, where we have space to have the product availability with us, to capitalize on the enormous customer relationship we have built over the years because of other product. and we hope that we'll continue to do that. With this, I will call on Deepak to take us through this exciting journey. Thanks.
So hopefully that gave you a good glimpse of some of the bottom-up work which is happening in each of our business units. Now, of course, the businesses cannot perform unless we have a strong foundation of all the enablers helping them and or building blocks helping them. There are 6 of them which I showed in the Pinnacle strategy page. The first one, I'll just quickly talk about them and then invite Vijay to cover some of them in detail. The first one is about customer first approach or customer centricity, as I explained. I think last year we took a big initiative here of key account management. We mapped out our big customers, identified almost 30 to 35 of them. Some of them came from acetyls as well, as Himanshu explained. What acetyls portfolio does, it gives us the access to the big customers. And on the back of those relationships, we have been able to open up conversations to talk about our broader portfolio and newer opportunities. So for these 30 plus customers, we did a bottom-up mapping of all the opportunities across our portfolio of 130 plus products that we today have, but also studied what their priorities are. Many of them are publicly listed, so they have announced their strategies, they have announced what they are going to do. Many of them have specifically talked about what they are planning to do in India and how they are looking for new partners. So we leveraged all of that groundwork and went out to meet all the customers. As Amrish was explaining, most of us were on the road last year between March and September, October, met almost 120 plus customers right at the senior most levels, discuss with them what we bring to the table, reintroduce the new Jubilant Ingrevia, our new strategy, and what we bring to the table, and of course talk to them about some of the potential hooks we had in our armor for them. And that generated conversation, and we created a new pipeline of opportunities which runs into hundreds and possibly thousands of crores. Now, of course, not all of that will materialize because some of those are just ideas at this stage. But what it does is a very clear sense of potential opportunities and areas where our customers are focusing on. And we are now in a focused way speaking to these customers, following up with them on the back of our first discussion to see if we can convert many of these opportunities into real commercial revenues for ourselves. The second one is world-class operations. I will not go into the detail of that. I will invite Vijay in a minute and he will cover each aspect of it in detail. R&D, I talked about, we are investing. We will be investing even more. We are expanding our team almost every passing month. We have gotten some new senior talent also, both in R&D and technology side. We are setting up a new process safety lab because a lot of our customers in MNC space expect us to have even higher standards of safety and processes than we ever had. So we are setting up a dedicated lab in our Greater Noida facility which will be focusing just on process safety, and that is just one example. Likewise, we are creating a technology cell and many other centers of excellence which Vijay will explain how that will help us creating the right infrastructure to deliver on this growth. Digitally, obviously the search program that I talked about, which we started a couple of years back, has yielded good results. Mr. Bhartiya talked about it. We'll continue with that journey. We got Lighthouse for one of our facilities. Our aspiration is to get for at least one more plant within next 2 years, and we are working towards that by introducing all these interventions across other plants as well. We have on the supply chain, we got Birajeev, who just joined us a few months back. He come with very deep experience of looking at supply chain in a different way. He comes from a digital background, so we are relooking at every aspect of our digital, of our supply chain, bringing digital interventions, making it more agile, lean, responsive, and efficient, and that is giving us synergies and some of the savings. Vijay will talk about it. The phase 2 of that I mentioned in the last investor call has already started. A significant portion of that will be driven by supply chain. And finally, on the people side, we have improved the productivity of our plants. I'm not sharing all of that data, but a lot of savings in our lean program, not lot, but a significant portion of that has come from productivity improvement. We have applied our performance management systems with lot more discipline, and wherever we had inefficiencies or lacuna in our organization, we have kind of cleaned that up, and we are still cleaning, and we are getting new talent, more capable talent into the organization, which is needed to not just bridge the gap, but bring the fresh energy and momentum which is needed for this transformation. So these are the 6 parts. We will talk about 3 of them. I think the customer one I have already explained, so I will not go deeper into this page. But let me just invite now Vijay, who is our Chief of Operations, and he will talk about some of the initiatives in more detail on how we have done them and what kind of benefits we have already gotten, and obviously more benefits are coming in years or next few quarters.
Thanks, Deepak, and thank everybody for coming here today and listening us patiently for almost 2 hours now. My name is Vijay Srivastava. I think you have already heard the name. I am a graduate from IIT Kharagpur, passed out in 1998, having a 24-year of industrial experience, work in different companies like DuPont, United Phosphorus, Deepak Nitrite, and others. So in my discussion today, I'll talk on 4 major elements: cost reduction, then I'll talk about ESG, safety and digitalization. I'll talk what we could do so far now, and also bring a perspective what we are looking forward in down the line, so that you get a good confidence that our strategy, how we are taking our strategy to next level. This year, as Deepak has already said, we could reduce our cost by 120 crore. I think most of this saving is coming from different initiatives we are taking at plant level. We are focused on power energy, and that has helped us to really reduce our cost by improving our efficiency in boilers. We have formed a COE Center of Excellence. We have done assessment of our boilers, compared with the best practices with other companies are following or internationally, and basis that we have developed a program which has implemented across the sites, and we could gain a saving of around, efficiency gain of around 9% in boiler, which is significant. Second piece is we are sourcing our power differently. Earlier we used to get all the power from grid, except Gajraula. This year we have purchased some of the power through exchange and also signed short-term contractor. We have signed a long-term contract, which Deepak was saying that is going to give us a benefit in down the line next year onward. Productivity improvement, this is an area which we continue to work on. I am also a Six Sigma black belt, so once the strategy is made, I find it, our team is very capable of looking at into detail and have a laser-sharp approach to provide a solution to those issues. And that is helping us. And so, this all has led us to a saving of around 120 CR. We have a line of sight to get additional 100 crore saving each year moving forward. I'll touch base on this in other slides. So these are the kind of 5 main pillars where these savings are coming from. Energy, as I said, already explained you, 17% improvement we see there. Effluent is another area which we are working on, as I think as Deepak was telling another colleague, is that we are working on concept of Center of Excellence. So here also we have formed a Center of Excellence, a team who is looking at how are we treating our effluent. And we had a major success in one of the big product we are making at our Gajraula site, and that initiative itself has given us a good improvement. Now similar project we have built for other product as well, and I think this year, even next year, we'll continue to get the saving from effluent treatment setup. Our target is to significantly reduce overall effluent. And when I'm going to talk about ESG initiative, this is also giving a good benefit there. Today, our 95% of our total waste we are recycling. In terms of norm, we have again formed a group who is doing external benchmarking for us, looking at how we are making our product, what are the new technology happening, not only in chemical, but in other industry, and then how do we leverage those technology in our plant, and then drive the improvement. So that is giving us a good saving. This number of 1% is for this year, but next year onward, this will further grow up significantly. Lean, we have looked at entire function, including operations, supply chain, quality, maintenance, projects, and then we identify the pocket where there is opportunity for us to drive the improvement. And those are the areas we have quickly worked on and then reduced the number of people. And that's the reason we are currently pretty, we see a productivity improvement by 20% coming from there. Digital, so far 30 high impact initiatives are implemented. And these initiatives are cutting across all the other areas. Like we have an initiative in energy. We have put a APC in one of our boiler where we are taking a trial on how automatically all the parameter of boiler is maintained and it is running efficiently. So similar initiative is implemented in different functions there. Now I'm switching gear, talking about ESG. A company who has a vision to become a world-class operation cannot go there if we do not focus on ESG. So this has been a focus area for us. Environment, in the scope 1 and 2, we have achieved a 6% reduction. And moving forward, we are expecting another 6 to 8% reduction coming in next 2 years' time. As I was talking about waste recyclability, 95%. That's a big number for a chemical company. On social part, we have a strong, in our Jubilant Bhartiya group, our CSR activity, we spend a lot of time and energy behind it, and so far close to 1 million lives are being impacted because of the work we do on CSR. 90,000 health consultancy is provided by us. Diversity is another area which we're working on. Currently, our diversity is at 6%. We want to take it to 20%. There is a program put in place. Next 3-4 years' time, that is where we wanted to take our organizations to. In terms of ESG rating, HS has already talked about it, so I'm not going to touch on this, but those are the kind of good reflector that an external world is recognizing the work we are doing, and that's how those ratings are coming. Safety, this is a pillar which we wanted to build on. This will help not only help us to make sure that we reach to a top, but also sustain it. Our focus is in 3 pillars here. One is workplace safety, process safety, and then we are working on building a culture. Workplace safety, we have made a good progress on this part, and the work permit system is coming from there. Process safety, again, we have formed a COE here, Center of Excellence. Our understanding, we have listed down the best practices which has to be implemented in chemical industry, and most of these are already, I would say, not matured at a level it should be, but we have implemented this. Now our current focus is to build a culture around it. That's the last 2 parts. That's a felt leadership, and we have put up auditing process. Our intent is, in the Bradley curve, we wanted to move from reactive zone to the interdependent. And this will happen, it's a journey, it will take another 2 years for us to reach there. But we are very confident that we will be reaching there. Our safety performance has already started showing significant improvement. I mean, compared to last year, all the data is available, but compared to last year, we have improved both in lagging as well as leading indicators. Digitalization, we believe that this is the game changer for chemical industry. So far, Indian chemical industry has not made significant progress. So we are early mover there, and that's the advantage we wanted to continue to hold. As Deepak was saying, close to 200 plus digital intervention is already implemented. We have 36 plus COE who is working, 26 plus COE who is working at different sites and functions. and helping us to make sure that these interventions which we are developing are implemented. We have 60+ people in the plant who are formed a team who is looking at all the digital initiatives which we are implementing across the site. We have another 300 digital intervention in pipeline, which this group of 26 plus almost 80 people, they are going to do a funnel activity, identify the opportunity which we need to take to the next level, and that is how this program will be driven throughout. So that is pretty much from my side on operation. I'll invite Varun, our CFO, to talk about the financial plan and distribution.
Good evening, everybody. I hope everybody is as excited as me listening about the Pinnacle 345 plans and the transformation that this organization has gone through in last 12 months. Before I take you through the financial plan, a one-liner introduction about me. I joined this company in August last year, and prior to that I was with Unilever for 18 years. And last 6 months have been, I say, truly exciting. Lot to do, lot done. So all the plans that all the business heads and Deepak have shared, what does it mean financially? So if I take you to the next slide, one key metrics that we keep tracking is our ROC. From sub 8% last year, it has gone up significantly to 12% in this quarter that we have reported, and we intend to take it to 17 to 20% in the coming years. And there will be 3 key big drivers for that. One, as the portfolio shifts from a chemical intermediaries dominant to a specialty business and a nutrition business, which is far more profitable, our return on assets will improve significantly. As Deepak shared, our exports will increase from a current 45-50% to 60% plus in the future, and our spread in chemicals will be more than 60%. So that's the one key big driver. Second, as Vijay mentioned, the savings program that we have unleashed in the organization, which is going to consistently deliver 100 crores plus per annum, will increase the return substantially. And these savings are not one-time savings. These are systematic savings which are taking the cost permanently out of the business. So our asset returns significantly improves, especially in the utilities areas. Thirdly, the discipline that we have inculcated in the business, especially on the capital allocation that we are going to do, will be much more controlled. Nothing less than 20% return will not be invested in. So these 3 key drivers will improve the ROC of the business sequentially, and we intend to reach it sooner than later, 17 to 20. Now the second key metrics that we will be focusing is on the cash conversion and the net debt to EBITDA ratios. And you will see the consistent improvement in our cash conversions also. From a sub 90% last year, we are sequentially now delivering 100% cash conversion to EBITDA, and we intend to keep it this way for the coming quarters. It will be done through really optimizing our working capital by increasing our credit days, managing inventory well, and the other, releasing the cash from the trapped assets. The second one will how do we really manage our net debt. So we will try to reduce it from 1.5 and bring it down in the range of 1 to 1.3 by improving our ROC and profitability ahead of investment plans. So together with improved ROC and better cash management, we see a much more healthier balance sheet and the P&L because of the better mix and more EBITDA. This will not be possible without we sequentially systematically improve our finance processes. We are in journey to automate our end-to-end processes, be it in procure to pay or in the analytics, or putting a strong guardrails around our project management or our consolidation. and putting the robotic process automations, RPAs, for end-to-end processes. So idea is to remove all the non-judgmental activities and automate it so that teams can be focused more on business partnering and we can be much more efficient and digitized. So better returns, more cash, and the more automated processes in a business which is more specialty driven and far more profitable. That's the whole summary. So if I have to summarize what this entire transformation will mean like, we'll be touching 10 to 12,000 crores of top line by financial year 2030. And if I have to see, we are on track of it. 4 times of EBITDA from where we started, so in the range of 2,000 CRs by 2030. And if you see this year results for the first 3 quarters, there is a big inroads we have done from where we started a year back. ROCE, as I mentioned, from 8%, we are already touching 12% in the last quarter through a mix of portfolio mix, better cost savings, and a more discipline. And the net debt to EBITDA ratios to be in a controlled way in around 1 to 1.3. These are the 4 key matrices that will be there as a result of the Pinnacle 345. With that, I'd like to hand it over back to Deepak. But also I want to remind all of you to please scan the QRs and put in the questions. I've seen few questions, pretty interesting one. I like to see more interesting questions coming from all of you. Thank you.
Thank you, Varun. So I think obviously we have exceeded the time. Apologies for that, but I thought it gave you a good holistic and integrated perspective on what Ingrevia is and what we are doing. Just to round it up, I'm an ex-consultant, so the presentation will not get completed if I don't present the investment thesis for you guys as potential investors or existing investors. I think we have a wonderful platform at Ingrevia. We are on the right track. The end user segments, as I showed the data also, are attractive with secular and robust long-term growth and higher margins. Number 2, the growth is rapid, and then we are hoping to touch that 10 to 12,000 crore in next 5 years with higher margins closing almost 17-18% at least, if not more, on the back of all the growth drivers we discussed today. Number 3, increased focus towards high value and specialty segments in our overall specialty portfolio, but also in the nutrition portfolio, as we showed Ashish showed the mix, almost flipping from 67-33 to 33-67. Creating new growth platforms, semiconductors, cosmetics, human nutrition, to some extent oil field also, which Amrish talked about. These are new growth vectors for us. We can already see and smell some opportunities in these areas. We will invest. Some of them will give meaningfully large revenues in the next 4-5 years. Some of them may take longer. But the idea is to create these platforms, not just from next 5 years perspective, but also for the growth that we foresee even subsequent to that. Diversified portfolio, I think I started my presentation by saying this, that you look at our portfolio, it is a complex portfolio. I took almost 6 months to learn about the portfolio after joining. We have to keep simplifying it in terms of getting rid of areas which don't perform or which don't have the potential, but we have already cleaned up quite a bit. But still the portfolio is complex. But what it also does is it brings the right diversity and balance to our portfolio. You just saw this year, unfortunately, acetyl has not done as well for us, but the other 2 businesses have stood up and held us together and have given us the growth and profitability that we were looking for. The operations, I will invite those of you who are interested to see our operations to visit our plants. Mr. Bhartia talked about our 2 big plants, Bharuch and Gajraula. We are doing a lot of changes. Some of our plants are old, but we are investing in them. We are ensuring that plants are safe, they are reliable, and at the same time we are investing in new plants. We created 6 new plants in last 1.5 years, and we have plans to create at least 2 to 3 more in the coming 12 months, and thereafter we'll be investing almost every year significantly to create more capex, more plants, because that is needed for the future growth. And finally, you met the team members, and with that I will also invite all my leadership team on the stage for the Q&A. We have an experienced and energized leadership team. It's a good balance between the old hands at Ingrevia who know the system, who know the capabilities, but also a lot of fresh blood and thinking in the company, which will help hopefully take us forward. So that's just a quick summary. Let me just invite all the leaders from Ingrevia on the stage so that we can start the Q&A. So please come over, and we can take the questions. Pavleen, if you and Partha can moderate, we'll take the questions. At least some of them. I don't know how many questions we have. We'll try to take as many as possible. Sumit, please come. Vishal, Amit, Yuvraj, Anurag. Some of the members did not present, but let me just introduce them as well as they come on the stage. Sumit leads our vitamin B3 business, has been with the company for 12 plus years, or 14 years rather. He knows A, B, C, D, E, F of vitamin B3. Himanshu met, I think, where are the other members? Yuvraj. So Yuvraj runs our CDMO business. Vishal has joined us, as I said, just about 10 days back, is leading our human nutrition business. Anurag leads fine chemical business, has been there for 12 years. Amit has been around for a while, but took over the picoline and pyridine business about a year back. Am I missing something? Where is Partha? Partha is our strategy head. He's the orchestrator of this Pinnacle 345 strategy, and has done a lot of legwork for this investor day as well. And Pavleen, of course, you know, I think all of us are here to take some questions. So Pavleen, you tell us, and then we will go around. And obviously all of us are around post dinner and at the booths. So please catch us in case you have any specific questions.
First of all, thank you everyone for submitting your questions. A couple of interesting questions that have come up, and we would like to address as many of them as possible. So we would first start with the question which is for Deepak, in which the participant have asked, Deepak and promoters have done various roadshows meeting various potential existing customers globally. What has been the key common takeaways from interacting with these customers, and how has been your conversion in getting business from these customers?
Sorry, Pavleen, I didn't get the second part of the question.
Second part is, what has been your conversion in terms of getting the businesses from these customers?
Okay. Yeah, that's a good question. I touched upon it briefly. As I said, we have been traveling around all the businesses. If I talk about personally, and some of them have done many more trips. I have been to Europe at least 4 times in last 1 year, US 2 times, Japan once, and China once, and Southeast Asia a couple of times. So, and of course India also, we have 50% of the business of several trips to Hyderabad, to Ahmedabad, to Baroda, and Mumbai. But some of the key takeaways, I would say, number one, I think the very first thing that our customers have appreciated is the new direction and the change Jubilant that we talked about in this room also in the last 2 hours. What are we changing? In fact, even yesterday, some of us were with one of our biggest customers talking about pyridine, but in the 2-hour discussion, we didn't talk about pyridine at all. Now, I think many of you won't even believe that Jubilant going to a customer meeting not even talking about pyridine, because Jubilant and pyridine are synonymous. But for 2 hours, all we talked about is what are their new growth molecules coming up, how can we accelerate some of the projects on the CDMO side, we can accelerate with them, and what are the other areas where we can support them on their growth. So I think our customers have acknowledged that we are changing, we are engaging with them, we are listening to them, and we are talking a different language than just going and talking about pyridine and pyridine prices and volumes. Number 2, of course, at least with at least 35 of those customers, which we are calling key accounts, we went with a lot of groundwork and preparation before seeing them in terms of identifying their focus areas and priorities and which molecules they're looking to outsource, so which I explained earlier as part of our CAM initiative. So that led to a more meaningful and constructive dialogue. And in many of those, customers have told us that we should look at some of these molecules. As I said, we have created a big pipeline on the back of that. Some of that has converted. Obviously, it will be quite foolish to expect a big proportion of that converting within a year, because all of it we are looking at multi-year journey as well as relationships. But a few big contracts that we have announced and what you saw coming as a blip, upside blip in our revenue trajectory gives us the confidence that the conversions will also follow. So I'm not worried, honestly. At this stage, I'm not worried about the conversions, because we are doing the right things. Customers are engaging. They are opening up leads for us, and we are following up. And we have the capabilities to deliver on them, so conversions will happen, if not immediately, in coming quarters and years.
Thank you, Deepak. The next question is, on the pyridine derivatives, how much of our base pyridine is consumed captively? And with the expansion of derivatives portfolio, how you see these mix getting changed over the period of next 3 years? Also, if you can share, out of 36 derivatives, how much of these would be campaign-based and and the current contribution to specialty chemical? What we see today is new leadership team helping us in the transformation journey. Your thoughts on the retention of this talent to achieve our desired goals?
Pavleen, you'll have to simplify the question.
Okay. So there were two questions actually. The first one is for Amrish. Maybe the second one is for Deepak.
So I think, on the pyridine derivatives, we have 7 plants which are multi-purpose plant. There are certain streams which are dedicated for certain molecules where volumes are large, but these are all multi-purpose plant. And these are certain products are 24/7 into 365 days. Certain products are on campaign basis. So it's a mixed lot. Now, I think another question, Pavleen, was more on the...
If you can share, out of 36 derivatives, how much of these would be campaign-based and its current contribution to specialty chemical business?
I think when we say 36, it's majority. I think almost 80% plus would be, where we are market leader and contributing to our SC sales as a PNP derivatives. Obviously, diketene are also there, which are more dedicated in nature. But it's a mixed lot. And it's a pretty old, we have been in these products for almost now 20 years all put together as a derivative journey. So these are very strong, large products. It's a large portfolio, primarily serving to pharma and agro and industrial, consumer, food, etc., nutrition. We are selling across the globe, domestic, US. We sell within China as well. We sell to Japan. Europe sales is relatively large across the globe other than India. So it's a mixed lot.
Yeah, and I think part of the question was whether these are campaign-based products. So, because there's so many derivatives and we make them in our multi-purpose plants. So we have 7 multi-purpose plants in Gajrala. We are building the 8th one. So obviously these have to be campaign-based products. All these are specialty. These are not bulk volume products. So, and we know which those customers are. They give us the visibility, and then we do the real-time planning and scheduling of the production in our multi-purpose plant. So yeah, these are campaign-based products, but for many of them, in fact for all of them, customers know us for several years, and they give us visibility well in advance for us to plan better.
So the next question from the same participant is, what we see today is the new leadership team helping us in transformation journey. Your thoughts on the retention of this talent to achieve our desired goals? This is for Deepak.
Sorry, what? Which question is this? That is the same question, no?
Yeah. So I just repeat. What we see today is a new leadership team helping us in the transformation journey. Your thoughts on the retention?
Retention of talent. Okay, sorry. Sorry, it's difficult to hear just standing behind you. Obviously, I think not just for our industry and company, finding the right talent and retaining them is the biggest challenge, if you ask me. We have been lucky to find, first retain whatever good talent Ingrevia anyway had, and we as a group are known as somebody who can find and retain the talent, not just in this business, in other businesses also. So we obviously had a good start, but also we have been very lucky to find some of the new talent, some of us standing here. I think for me at least, and now I'm saying as somebody who has been on the other side as a consultant, the biggest thing that helps in retention of the talent is whether we are excited about the mission and the challenge that has been taken. I think I personally feel, and you should interact with the team, they will talk. I don't want to speak on their behalf, but the energy, the excitement, and the focus that I see towards the mission we have defined gives me the confidence that all of us are charged up and working towards that mission. Obviously, there are other aspects of keeping a team motivated. All of that is well taken care of through our HR systems and incentive systems.
So the next question is for Amrish and Amit. For the oil field chemicals and specialty chemical portfolio, could you please share the application areas, and also what would be the total addressable market and service available market for Jubilant?
Very good question. I think, oil field is a big... Please, Amit, go ahead.
So, I hope you can hear me. Yeah, so the application area where our current intermediate is getting into is corrosion inhibition application in the oil field segment. And this particular segment of corrosion inhibition is very wide, and there are several alternatives which can be used. But this is one of the key intermediate which gets into the upstream, midstream, and the downstream side of the oil field. And if you talk about the total piece as an oil field, that is very wide. What we understand, it's about a $13 billion industry. And with having got a foothold into this segment with the notable customers in this segment, we are looking at adding new products as we move ahead, and especially trying to see where, what those fits could be based upon our expertise and what the customers need.
Thank you. Now the next question is for Varun. What is the asset turn that the company is expecting from the specialty chemical business at the maturity when the segment achieves 6,000 crores of revenue target in FY30?
So I'll put it in a different way. So any new capex that we will do should give me a minimum of a 20 to 25% ROCE. And typically in a specialty chemicals, be it a CDMO contract, the ratio of asset turnover should be in the range of 1.2 to 1.5 at best. So that's how I will put it. As long as my assets are giving me a better ROCE, turnover to me comes secondary from them. They should be more profitable and generating more profit for us. Yeah. But that's a typical 1.2 to 1.5 is the ratio that it works to.
So another question also is for Varun. Since we are aiming at tripling our revenues by FY30, and how you expect to fund the capexes that will be required to achieve this kind of a growth going forward?
A good question for all the analysts building the models here. So most of it will be funded through our internal accruals. As our profitability increases and our cash conversion touches 100, the first port of call will be the growth capexes. And while the timing plays a factor here, but our most of it, lion's share, will be through the EBITDA that we will generate. Does it answer?
Yeah, I'll just add to that. If you see the last 3 years also, and some of you have asked that question during the investor calls also, we have invested almost 1,700 odd crore, and our loan is still only at 750 crores. So we have whatever internal accruals we have generated through the EBITDA and through efficiencies, we have reinvested, and that's the plan. And if we do it in a disciplined manner, at least our Excel model suggests that we will remain within the asset turnover ratio that Varun showed in his slide, despite the massive growth that we are looking at in the next 5 years.
So the next question is, how should one think about the incremental 100 crore savings that we plan to do, and what are the changes that we are doing to drive this?
Vijay?
So on this 100 plus saving, we are expecting this to come from few critical initiatives. Energy is still going to be a driving factor, where 50% of this saving is expected to come next year. And then after that, norm improvement, that's a second area where we are working on, and then third is effluent treatment. These are the 3-4 areas where the saving is expected to come.
Thank you. And the next question is, for the growth roadmap that we've given for Pinnacle 3, 4, 5, is it the only volume growth that we have taken into consideration, or certain price increase also that we have planned for this Pinnacle 3, 4, 5 roadmap? Also, what are the key risks for our vision of Pinnacle 3, 4, 5?
Let me take that. I think that's a very good question, and we did build out those scenarios. So first, couple of base assumptions we have made. Of course, we expect the markets to come back in the near term. I think, as I explained in the early part of my presentation, we are already seeing volumes coming back in our core segment. So we are hoping that at least from volume perspective, the market will normalize, and whatever let's say bloodbath which has happened in the last couple of years will subside. And at least the indicators suggest that that assumption is a valid one, and the volume recovery will not get delayed any further. On the pricing for most segments, at least our going in assumption is that prices have reached a new normal because of the overcapacity in China, and we are not expecting the prices to come back anytime soon in a meaningful way. So our sense is it will take at least 2 to 3 years for prices to show any kind of recovery. In all likelihood, we have come to a new normal. There are products in China where the overcapacity is up to even 60%, 70%, and hence the competition will remain. Now, of course, it's a very uncertain world with all the tariff talks happening across the globe. Nobody can predict what will happen if tomorrow there are meaningfully large tariffs for one country or others. But the base case scenario we are building is keeping the prices for most segments where they are, with marginal uptick in sub-segments. Acetyl is the only exception to that assumption, because acetyl works in a very different way. It's a commodity product, it goes with the cycle. There we are hoping that as volumes come back, the acetic acid, which is a driver for acetic anhydride price, which is our core product, the pricing should come back. But again, that's just an assumption. As Himanshu showed, in acetyl business, we are not expecting an exploded growth in the next 5 years. 1.5 times is based on largely volume recovery, but a little bit price recovery as well.
Thank you, Deepak. The next question is that we have seen significant manufacturing footprint and strong balance sheet for Ingrevia. So what kind of inorganic growth strategies can we see, and what are the nature of potential targets that the organization would be interested in?
So Partha, you want to take it? There.
Hello, can you hear me? Yeah, so as we look at the Pinnacle 345 target, we have laid down the plans by each business unit, but we do believe that there is an inorganic part which will also play a critical role. So it's in our ambit. We are actively looking at quite a few assets in this space spread across the business units, and we will talk about it, as and when it materializes. But yes, it is a part of our growth strategy.
Yeah, so I think one thing I'll add to what Partha said, our areas where we want to do M&A are very cleanly and neatly defined and sharply defined. We are not going to do M&A just for the sake of doing M&A. We are very clear, in line with the strategy we shared today, where we think there are gaps in our portfolio and where doing something inorganically, whether it's a full-fledged acquisition or JV or partnership or whatever other structure we follow. We are very clear where the gaps are and where doing any inorganic move can help us accelerate our journey and bridge the gap that I talked about between 10, 11,000 and 12,000 crore. So organically, we already have a lot to do, as you saw in the portfolio. So we, of course, want to, the first priority is to deliver on that. Obviously, as Partha is explaining, based on the thesis areas we have defined, we have already started to make a list of potential targets. So we are also speaking to some bankers who are helping us. So as and when we find the right target in our thesis area, we will, of course, go for it.
Thank you, Deepak. So the next question is, with the exports remaining a key area for our future growth, how much are we immune to tariff wars from US and other global trade issues? And how we see our future revenues contribution from US and European region?
Amrish, you want to take it? Yeah.
See, I think right now Trump is the elephant in the room. Nobody can predict it will go in which manner. For our kind of product, which there is no manufacturing within the US, we believe even the tariff comes, we would be competing against China. Let's assume that typically because of the fact that we are competing with them only. So in that scenario, let's assume the worst. We still believe Chinese tariff would be higher compared to the tariff which will come to India. So still that delta will allow us to sell more. And obviously that will also increase the cost. So what we have seen over a period of time, if there is a manufacturing in US, typically they have put a 6 or 7% kind of import duties. And wherever there is no manufacturing within US, the duties have been zero. So that delta is large. On 4th of February, China has, Trump government has put some duties on them, 10% plus. So if it is a zero, then it is 10%. If it is 6.5, then it becomes 16.5%. Now China can absorb to a certain extent, but beyond that it would be challenged. So we believe that this issue will not much impact on our sales, first. Second, I think during presentation, Deepak has already showed that our focus is to increase Europe and US both. Now, if you see on the agro side, the major players are based out of Europe. The top 3 players are there. There are 2 players within the US. We are focusing each one of them in both regions. We are focusing on our fine chemical derivatives, which we believe would bring strong value. With the fact, especially on the pharma side, the first tier 1 CDMOs are based out of Europe itself. We are further, one side we are working with, trying to work with innovators to increase our sales. Second, we are also working with the tier 1 CDMO within Europe, where we can increase our sales directly to them. So overall, numbers will definitely double. India will come down as a whole, even nutrition or any other businesses. We believe these headwinds would be there, but we would be able to take it to next level. And Deepak has already announced, shared the CAM initiative, the kind of meetings we are having. This example, what he shared was of this customer who came, we met yesterday, was a European player. First time we had almost 100% share in last 20-25 years. So I think that's the difference we are making with our services. So we have product, we have improved our services, which will give us, premium on certain premium for site of refusal and long-term longevity in these all relationship in days to come. Thank you.
Thank you. The next question is, in our CDMO pipeline, what is the percent mix of the business that comes from pyridine and diketene chemistry? And also to the 2,000 crore CDMO revenue target by FY30, what will be the mix like?
Hello. So typically, if you talk about our CDMO project mix, it's primarily we're in terms of pyridine and diketene derivatives. But moving forward, what we have seen that depending upon the kind of chemistries that we've been working on, we have shifted this to a non-pyridine mix more now. That's the way that the shift that we are looking at and moving forward in the next 5 years as well.
Yeah, I think we can share that down the line 5 years our major revenue would be coming non-Predene. Let me put that way. So Predene remains a very core building block to offer our strength, and as I shared earlier, we are trying to build multiple chemistries as ancillary chemistries which can be offered in a bundle. It is not limited that only if it is a Predene we will do. It can be other chemistries. In fact, one of our agro contract I can share that it's not based on Predene chemistry. It is non-Predene what we are talking about. So we are growing and we will grow as a specialty chemical company offering multiple chemistries where Predene is one of them, which we have major expertise, but not only limited to Predene or diketene. 50% plus revenue would be non-Predene.
I think I'll just add to that because this question has come up in several discussions in the past also. So while we are very proud of being number one in Predene, but a lot of our future growth will be driven by non-Predene areas. So just from a CDMO perspective, I think what Yuvraj and Amrish already said, just to put some numbers in perspective, in pharma portfolio, even today 70% of my business is non-Predene. In agro, the two big molecules we won recently, which we announced, one is Predene, one is non-Predene. So we hope that ratio will maintain. Semiconductor has some organic chemistries which we are experts in, but none of them is related to Predene. So that
E-Predene,
E-Predene is of course a catalog product, but the 8 CDMO projects there are none of them is Predene based. So that hopefully gives you a sense that what we are leveraging to push hard on CDMO business is our chemistry capabilities, not necessarily Predene as a product capability. And when CDMO customers are speaking to us, they're coming and saying, look, hey, I want to do these 4 steps. How many of them you can do in your plants, or how many of them you have done in the past? That is what is clicking with them for them to speak to us and give those projects. So it's obviously whatever comes in Predene, we'll take it wholeheartedly, and customers also, in all honesty, do not really have too much choice. I say that in all humility. Beyond China, if somebody wants to come for Predene, they have no option but to come to us. But bulk of our growth will come from non-Predene areas.
So another question is again from CDMO side. How would the pharma CDMO of Jubilant Ingrevia different from the CDMO business of Jubilant Pharmova?
Okay, let me answer that also. Good question again. I think first we did not talk too much about Pharmova in this room. So for those of you who do not know Pharmova, it's the second baby which came out of Jubilant Life Sciences when the split happened in 2021, almost 1:1 split. Pharmova handles most of our healthcare and pharma businesses. They have multiple businesses. In fact, they also did their investor day a few days back. Some of you might have attended it. The way we look or split responsibilities across, and I just see Arvind here, so I will invite him also to add in case I miss out something. But the way, at least on the CDMO side, we split the responsibilities. The intermediates part is with us because that's our core capabilities. As I explained, the name Ingrevia itself means ingredients for life, and so all the intermediates in the pharma world, by and large, are done by us. Biosys, which is part of Pharmova, does pharma CDMO for APIs and some advanced intermediates. So that's how we split at least the responsibilities or roles. But having said that, obviously we are sister companies. As and when they get some opportunity where we can help on the intermediate side, we tag team, and likewise when we meet some customer which is looking for API capabilities as well, beyond just the intermediate strength that we bring to the table, we pull them into the picture. So they have more GMP grade plants for APIs. We have plants more suitable for intermediates. Arvind, you would like to? Arvind? Yeah, thanks.
Thanks, Deepak. So the last question is, so phase 1 of the capex for Jubilant Ingrevia ends in March 25. What is the capex plan for the next 3-4 years?
So the capex plan for the next few years will be predominantly investment in specialty chemicals, as we have outlined, which will include investments in CDMO, in the multi-purpose plants, or into a new GMP facility. As and when the businesses will come for CDMOs, we will not shy away from making any investments as long as it meets the threshold criteria. So the investments we have made, I believe we have enough ammunition till 27 to reach our desired top line and bottom line in line with Pinnacle 345, and to reach to the 10 to 12,000 crores top line and deliver the bottom line that we have just shown. Any additional capex will be dominantly into specialty and nutrition.
Yeah, so I think some of you have asked this question in different ways in the past. I think we have invested heavily in the last 3 years. We are hopeful that the peak revenues on the back of those investments will hit in FY27, and then part of it because market recovery and slowness in the last 2 years. Otherwise, ideally, we should have hit the peak in FY26, but nevertheless, all the investments we have made so far, we will hit the peak revenue on the back of that by FY27. But for hitting the numbers which we have for FY30, we'll have to continue to invest in the business. And the quantum could be actually even bigger than what we have invested in the past to get that incremental revenue growth that we are aspiring to get.
Thanks, Deepak. So this one last question, and that's again from CDMO. Within CDMO, what is the mix of early versus late stage commercial projects?
Late stage versus late stage molecules.
And are we doing any development work for the innovators?
To answer this question, we are working with innovators on the development in-phase molecules as well. And if you look at our mix as well, we have around 65% of the molecules which are getting the in-phase stage of molecules, commercial molecules, and then just 35 on the commercial side of it that are there.
In fact, we can say that our majority of CDMO business is with innovators. We are not working with generics. It's directly with innovators. We have been able to create a relationship, and we are going deeper, and we are further expanding into new market. And we have already shared that we have accelerated BD efforts where we are, recruiting more people in US, Europe, Japan. I think those number of projects will go up. Phase 1, Phase 2, Phase 3, all we are looking. And that's the reason we are also planning to invest further into GMP facility. We have clean rooms already, but we are planning to put up more on the operational area side so that we can produce higher volumes of these intermediates, primarily on the pharma side. And agro anyway, we have been talking big, so those numbers will continue to grow.
Thank you, Amrish. So this brings us to the end of the Q&A session. And now I would request Deepak to just close the event with...
No, I think it's been wonderful having you all. I really appreciate it. We do realize it's a Friday evening, so you must be having plans, but you still took time out to join us, and hopefully whatever we covered in the last 2.5 hours was helpful. We are around, we will be at the booth, and obviously we have dinner as well, so we invite all of you to join us for the dinner and interact with us. And have a great evening and great weekend. Thank you once again for joining us.
Thank you.
Cool. Aajo, Pavleen.